What's going on, guys? Welcome back to your favorite place to be, where we're very happy that you could come in on a Saturday. No? Welcome back, guys. We're jumping right into it. A lot of people are reaching out, and I do appreciate that, especially with the growing channel here. Cryptocurrency theory, we like to make sure that everybody understands what it is that we're trying to do here on the channel. So first and foremost, thank you guys for watching. We really appreciate that. And then secondly, I want to let everybody know who's new to the channel, since we've been getting so many new subscribers and people have been reaching out and trying to get a little bit more edge on the market. I want everybody to understand what it is that we're trying to do here. And I talked about it yesterday in a previous video. Go back and watch it. And basically, it's something along the lines of like, we understand that people's portfolios are a wide range of different allocations. You know, some people have a modest portfolio. They're starting for the first time. A lot of people here on the channel are basically starting their first portfolio here watching the channel, which we, we feel obliged to introduce different various topics that kind of get you to understand what's happening in the macro economy, and then get you to understand where the money is flowing to. That way you can place yourself into viable trades that will obviously push your portfolio much higher. And that is kind of the idea behind the channel. When I first started the channel, it was for fun, and the fun that comes along with that is very simple. We want to maximize our financial bottom line. We want to maximize different vectors to potentially push our portfolios into ranges that most hedge funds could not even dream of. That's why we have a variety of different people watching the channel. We cover a variety of different topics, and we also cater to people with a multi-million-dollar portfolio and people that are maybe potentially starting their first portfolio and understanding the various aspects of it, and navigating those various aspects to precision to make sure that they're diversified in the right market. So welcome back, guys. If you haven't watched a live stream yet, we are thrilled to get going here. You know, we have been a little bit on the move this week, a little bit less here on the YouTube world, but that is not to frighten you guys. We are always here. We are always coming back with the action and the attention to detail that you so rightfully are deserved. So last week, guys, I don't know if you guys were catching in, or you were doing something that could have been more important. I don't know what could be. But we did dive in deeply into the Fed market report. We can, obviously skip past that being a week and a half out. But if you haven't watched that, I think that video probably is very important for people to kind of put their foot down to kind of understand where the market makers are pushing various large amounts of capital and rotating capital into various markets. And we are basically following that pretty closely, because if you guys got to understand something very important, and a lot of people don't. A lot of people here on the channel might be investors. You know, they might have some crypto coins. They might have, a couple of a diversified stock portfolio. But what we understand here on the channel is, for one, we're opened up. We're watching the markets 24/7, 365 a year. And if you don't watch the markets at pivotal moments, you really don't have any kind of say here on the channel when it comes to actually understanding where the markets are deriving their value, and how portfolios can be shifted in a positive direction. You don't really understand that. So unless you come down to the channel repetitively and understand the market dynamics that are pushing certain prices, you might get caught up into a hot topic of the week and lose all your money. Or you might a trade might go against you, and you might not be able to hedge that trade based on your diversification within your own portfolio. And then obviously, it's a snowball effect from there. So here on the channel, guys, I just want to remind everybody why we're on the internet, why we do this live stream, why we create these videos, and how much time and effort goes into this, and get people to really understand what it is that we're actually doing here, guys. We're actually building an online community, probably one of the strongest online investment communities on the internet. Because if you go to a lot of these other investment live streams, you got the person talking about this random stuff that really isn't really improving your portfolio. Like if you actually follow these people, they're talking about vague topics. They're not really diving into the nitty gritty about how all this stuff is macro correlated. And that's why a lot of people, they join these investment, I've done it too. I've been guilty of it too. You join these investment YouTubers, you don't make any money. You don't really, you're sitting there listening to somebody that really isn't going to boost your portfolio in any certain direction. And here on the channel, we like to do the exact opposite. We like to actually show proof here through demonstrated, demonstrated postings and lives and video content that if you actually follow the timeline of what we're doing here on the channel, you'll notice that the portfolios that we're building out are relatively healthy. They're relatively several 100% gains. We're diversified in enough asset classes where we know what's going on in the macro economy, and we also know how to position our particular portfolio to cater to a lot bigger of an upside than what somebody is talking about with a hedge fund manager trying to move the bond market. I mean, it's really a bit repetitive, guys. And then you go over to the crypto side of stuff, and you can't find one good crypto guy on the internet because all the stuff they're blowing up your ass is basically smoke and mirrors. And it's just like it's either Bitcoin this, Ethereum that. You got Ethereum, running sideways for fucking 5 years. You have Bitcoin that everybody's talking about at the top, and they're kind of missing all the in between singular narratives that have really been propelling the crypto markets into multi 100% gains. And we're probably one of the only channels on the internet that's actually been covering this. And if you find another channel, please drop it in the comment and let me know, because I really can't find anybody on the internet or on YouTube that is covering the variety of topics that we consistently cover here on the channel. And not only do we tear apart the crypto markets and kind of just put them front line and center here on the channel for you to just absorb and basically walk into a reality that is like I said, gaining multi 100% gains. I don't know anywhere on the internet that's done that. If you guys could find me one YouTuber, I would love to find him, and I genuinely mean that. I don't mean it sarcastically. I would literally love to find one general YouTuber that is on the internet that is giving you these trades that are based on tokenomics, based on cycle theory, based on where the money and the market makers are pushing the money in the moment. Rather than this look back thing where a bunch of YouTubers are saying, oh yeah, well, we told you to do this here and we told you to do that there. And it's like you've been watching every video and nobody's told them to do any of that stuff. So, that's kind of the crypto market. And then when we kind of sidestep into other stuff, it's kind of funny because a lot of these crypto YouTubers, they don't understand the macroeconomics of how markets move. They don't understand liquidity. They don't understand anything past really this idea of providing this, brain rot onto the internet. So you can basically just click on their video and get absolutely nothing out of it. And that's not what we're doing here on the channel, guys. That's not the channel that I operate or run. My channel here is and our channel, really, I find it really, really amazing too, because it's not just my channel. It's really the whole broader cryptocurrency theory community here on the internet that really, really drives the channel forward. And we've had a lot of participation from the members, and that's why it takes, roughly 10 minutes for me to just explain to you guys where we're at in this thing, because we've been on here almost 4 years, and a lot of people have shown dedication. They've been, reposting our videos over on Twitter X, because I'm not over there. You guys know I've gotten banned from there several years ago. So we've had people honestly, like, they have honestly, like, gone out of their way to really push this channel forward. And I think that really is the most amazing part about that I even, being the creator and the founder of this channel, oftentimes forgets, because, a lot of times with this channel, guys, I kind of lose my thought processes on where and what is actually driving the channel forward. And it's not really me here talking about this stuff. I mean, I guess it kind of is in terms of the practicality, but it's really the end user of who's watching this channel that really benefits the most, and actually getting this stuff out there. Because if you look for crypto content on the internet, there really is none. I mean, it's literally 99% of it is people talking about stuff that is so irrelevant to the actual tokenomics behind the actual projects that are out there, that it doesn't matter how many videos they make or how many people watch the videos, none of those people will ever benefit any percentage gains from anything these creators or these investors, I say it loosely, are putting out on the internet. So that's the first thing. And then secondly, I think what is very important is if we want to understand crypto markets, we also have to understand the macro market. We can't pretend to understand the macro market because I feel like a lot of people on the internet do that. There's a couple channels that I've watched, and I've caught these YouTubers and these creators, sitting behind a fancy desk with a fancy suit with a guy on a telephone or on a Zoom call that's supposedly a hedge fund manager with a description in the bottom saying, hey, if you want investment advice, call my friend with the Series 65 license, or any of these other various license, and we'll get you set up today. And a lot of times, what I find with those people is that they're talking about vague topics, but I also simultaneously catch them saying things that are contradictory to the actual macro market of market makers actually moving the actual markets, which is kind of the funny thing, because a lot of people here on the internet, they really are looking for genuine content. They're really looking for people that are actually in the markets, like myself, that are immersed in these markets. And when you have somebody talking about a market that they're not even invested in, or they're talking about investing capital or investing money, and they don't actually have a portfolio, or their portfolio is if people saw their portfolio, they would really question who it is they're watching. And a lot of that is kind of plagued the internet, because in the YouTube world, especially the crypto and investing world, most people here on the internet, their portfolio allocations are almost non-existent. And we've seen this from a lot of crypto YouTubers that are no longer in the space, but we've also seen this in these giant marketing campaigns to drive people to invest in these to get wealth managers to kind of capture this baby boomer community that's had this retirement fund that has never owned a stock in their life. And I find that a lot on the internet. And I know what it is they're doing. So I want to tell people kind of first and foremost what that actually is, because you'll never actually make any type of substantial gain. And obviously, if you have multi-million dollar portfolio, or even $100 million portfolio, right? Some of the things that we talk about here on the channel might not cater to that amount of liquidity, because you won't be able to get in and out of those trades, right? But if you look at the macro stuff that we've been talking about here, especially over the last couple of weeks, because I've actually taken a step back and really tried to allocate a lot more time to the macro stuff, simply because if people here on the channel understand the macro environment, they understand the investment environment, and they're able to step into that investment environment with confidence on why things trade inversely, why certain things trade in parallel, and what kind of are the outliers that drive specific markets in various directions. They step in the market with a lot more confidence, and they oftentimes find that they have a strategy, which a lot of times people on the internet are not giving you a strategy. They're telling you to call this guy and invest your Roth IRA with this wealth fund manager. They're talking a little bit about bonds. What they're saying about bonds is like making a little bit of sense. They're using like play on words and these various English techniques to like try to allure to the viewer that they know what it is they're talking about. But then when you actually look at the numbers and you actually cross-reference a lot of times what they're saying, you find that these people have absolutely it's almost as if they're not invested in the markets at all. And a lot of times they're not. They're invested in their YouTube channel because they want you to click on their video, or they're invested in their wealth fund management company, where they get a percentage or a fee every time they trade a stock. And these aren't the traders, these aren't the channels that are going to get you multi-100,000% gains. And I guarantee you guys, if you go back and you watch some of my videos, you'll find that a lot of the trades that we've been doing here on the channel are multi-100% trades. They are multi-1,000% trades. And it is Saturday, so I guess it is worth tooting our horn a little bit to kind of tell you what these trades are, right? If you're new, you don't really know what the trades are. What was like Stellar Lumens, it was XRP into 2024, where nobody was talking about Stellar Lumens, and we rode it all the way up to over 50 cents. It was the Bitcoin Cash run under $80 all the way up to a $300 pump in a bear market, and then a sideways action into a multi 100% pump from the bottom, into a multi almost 700% gain into a BCHG premium play that we did on Bitcoin Cash Grayscale. It was maybe last year where we saw a multi 100 to over 1,000% gain in the privacy sector, which we're following very closely. And then most recently, over the last 30 days, this momentum that's been picking up behind a 50 to almost 100% gain in crude oil ETFs and a variety of different option spread that could have provided a multi-1,000% gain. So we don't just talk here on the channel. We do like to talk here on the channel, but we also like to understand that there's not really anybody doing this. If you go to the biggest YouTubers that are talking about oil, they're sitting there going, yeah, it's going up. The bond market's starting to move a little bit. I mean, it's really kind of like utterly boring in terms of like the actual content that they're actually spitting out, because they're not really giving you guys any multi 100% gains, right? They're actually like, it's not really that positive to actually building out your portfolio to actually get these gains. So where we were picking up last week, and you know, sorry for the delay lasted the middle or the beginning and middle of the week. We obviously we started seeing a little bit of recovery in money printing, where we actually saw the markets kind of reverse into the narrative that we left off last week after last week's Fed meeting. But as the week progressed, we saw the reality really start to come back into shape, and then ending the week, we kind of saw this trajectory of the portfolio allocation going in a certain direction. And what that portfolio allocation was, guys, and if you have been watching the channel here, there has been this ongoing narrative of the dollar increasing in value, and what that really means is root fundamentally, so people will actually understand what this graph is you're seeing. What are you looking at first? For people that are kind of oblivious to where we're even at, maybe they're clicking on the channel for the first time, and they are basically you know, they're looking to invest money for the very first time today. And what this is the US dollar index, and this is going to be like a futures quoted index based on the US dollar. And what it basically is it shows a graph here that basically shows the strength of the US dollar. It's kind of a weird graph in the terms of that it shows the momentum behind the dollar. But really what people look at when they're looking at the DXY is they're looking at how the dollar is performing against other fiat currencies. So this is something they would look at. And if you were, you know, say you were in Japan and you were, you know, you were invested in yen, Japanese yen, or you were in, you know, you were in another fiat currency like the euro or anything like that. This is going to be like the most highly liquid market when somebody looks at the DXY. They're invested in maybe like a Forex market where they're trading fiat currencies or exotic currencies, options or binary options or swaps against the US dollar. They're going to be looking at this DXY to really kind of develop a backstory to where exactly the dollar is in real time. So what it means is it basically takes the dollar and it looks at the strength of the dollar in the current moment. And what we've seen here over the last couple days and really into the end of the week is we've been seeing an increase in the dollar in terms of against other fiat currencies, obviously, but also the strength and how the dollar is reacting to these higher interest rates that we broke down in the Fed summary video last week. So what it means is, guys, is that the dollar is becoming a safe haven for other fiat currencies around the world. So you have foreign investment going into the US dollar simply because their currencies are weakening against the US dollar. Now, the interesting part about this is not only is the dollar getting appreciation and, you know, fundamentally rising in value, it's also, when we take a step back out of that, and we look at it at a macro level, we understand that the dollar, the US dollar being the safe haven for investors and retail and hedge funds and sovereign wealth funds and basically anybody around the world, foreign investors. We also understand that this dollar DXY index also kind of on a macro level is showing us something a little bit different. And I'm going to pull up, what I'm going to do now is I'm going to pull up gold, the COMEX. I'm going to put the gold futures price up here on the screen for you. And we're going to look at futures right now for the price of gold. Now, what is interesting here, and what I want people to really understand is that the dollar rising into this, you know, this multi, like, I mean, really the last couple months, gold, we saw market makers go into gold pretty aggressively. You know, here's October of last year. I'm sorry, October of 2023. Here's October 24, and here's October 20. I'm sorry, October 22, right here on the screen. October 23, and then the most interesting, October 24. All right. So what this means is we are actually looking at kind of gold kind of running kind of flat, right? We saw gold for a number of years kind of just underperform the S&P. We saw gold really not really break out at all. It was kind of like, yeah, I mean, it went up if you zoom in and you got in way down here in October of 22 and maybe you sold here at October 24. But really what we saw here was a consolidation. We saw sideways action in gold. And then at the end, right here, October 2024, we saw gold really kind of leap into 2025. And then that following October of 2025, we really saw the explosive action in gold. And we really saw this volatility really start to pick up here after January, right? After we really saw this whole precious metals rally kind of really hit the front line in center news. And guys, it's also important to remember here on the channel, just an FYI, when stuff is hitting the mainstream news like CNBC, Fox News, and they're telling you, hey, gold prices are hitting an all-time high, that is your indication that volatility is about to start picking up, because that means that retail traders are now watching gold, they're watching silver, and they are basically jumping into these markets while simultaneously market makers unloading positions onto those retail traders. So it's just a little food for thought. When CNBC and everybody's talking about a certain thing, it's usually time to really unwind positions, because really people have already been in those positions for a number of times. We've seen it with Nvidia. We've seen it with Facebook. We've seen it with all these, you know, these top leading companies on the S&P. We've seen it with all these companies, and that narrative is always true with any other investment vehicle that you're ever getting. We always know that when everybody is talking about it online, when Fox and CNBC is talking about it online, they're telling you everybody's going into gold. You know, gold's at an all-time high. We know that emotional traders are going to be right there to buy the orders. And that's exactly what's happened with gold. The people in gold, guys, I want to tell you where they made money. I'm just going to tell you guys right off the rip. That way there's no hidden agenda here on the channel. You know, what do you mean? What do you mean? What do you mean? Well, what I mean is the parabolic jump, the spike in gold really was down here, right? It was really October of 2024 when we had that bullish formation. We ran sideways into the summer of last year, and we saw a massive spike in gold. And obviously tech stocks and a lot of stuff went up after March. We had that V-shaped recovery in the crypto markets. So this highlighted by gold really capturing all that volatility right there. See that volatility on the screen right there? Because we all know last March and April, we saw a V-shaped recovery in the S&P. We saw a V-shaped recovery in the crypto markets. And we saw a artificially pumped S&P, meaning that money was being printed and artificially pumping the markets. And that's what we saw right here. That is why there's a consolidation in gold. And then also towards the end of the year, we saw a massive run up in gold. And now we're seeing a massive sell-off in gold. And now we're going to go right over here we'll skip crude oil. Let's go to the S&P first. So what we saw also is when we started seeing that, if you guys are just catching in, this sell-off in gold, and it's really been accelerated by the Fed meeting last week. We saw that when Fed Powell was jittering his teeth, lying to the U.S. economy and the U.S. all the U.S. citizens about how inflation is 2.7% and we need to keep unemployment where it's at 4.4%. We're going to keep these interest rates at 3.64%, and we need to understand that that was basically Jerome Powell writing the fate of the actual U.S. economy in real time, because really what that meant was that we have no control over what's about to happen based on this oil crisis in Iran, and that inflation unfortunately will be picking up. It's going to be picking up in every sector because everything from the clothes on your back to the gas pump to the tires on your vehicle to the food and medicine in your fridge is connected to crude oil. So it's just it's irrational to think that inflation will not accelerate. And that's kind of where we're going to go right here into the S&P graph. Is that's why we had a sell-off in gold, because once that dollar started rising, and I'm going to paint you a real big picture here. Once this dollar starts rising, the brokers are getting calls. The brokers are starting to call these hedge funds. They are starting to call these hedge funds, and they're very diligently doing a margin call. We did videos on this last week. And like I said, we had a little bit of a down against the narrative here into the Monday and Tuesday shift. But then towards the end of the week, we saw this narrative pick right back up where we left off, which was a sell-off in gold to cover the margins in the S&P. And obviously, you see a little bit of a recovery right here in the S&P. I got the S&P 500, the S&P right here. GSPC was going to be tracking the S&P. And like I said, we had a little bit of recovery, but like, is this a recovery, guys? I don't think so. This is a downward shift. This is people having to sell off gold to cover their margin, while simultaneously people are exiting their positions on their S&P positions, because we all know on the S&P, guys, as investors, we know there's a couple companies that have been fueling the new growth in the S&P, and a majority of the companies are having problems servicing their debt, which is becoming an increasing factor that will drive unemployment higher, and then also an increasing factor that will cause these companies more headwinds into the future, because that servicing of that debt becomes that much more expensive. Why does it become that much more expensive? Because the dollar is rising, and we have an indication that this is where traders are allocating capital based on the gold selling off. Now, that's kind of what's happening with the S&P. We are going to jump here to where market makers have been pushing and making money here very rapidly, because, you know, guys, just because the markets are down in certain areas, we obviously know as investors, where is that capital flowing into? Well, guys, it's been flowing right on the back end. And now we're kind of in an interesting moment, because now we've seen literally a 40% WTI index increase over the last 30 days, right? We saw the Brent crude oil index, which is even more up. It's probably like 50% up now at this point. We've seen heating oil, we've seen natural gas up over 60%. So we obviously know that while this instability and volatility was happening in the markets at the peak of gold, what do we see market makers do? What do we see market makers do, guys? Drop it in the comments right now. I'm going to give you 10 seconds as I take a little breather with my coffee here. Market makers, if you're thinking, I'll give you a hint. I will give you an actual hint here. What did market makers do after gold topped off? Look at the chart, guys. Coffee can wait. Look at the chart. What do you think market makers did as retail started piling into gold and we started seeing volatility in gold? It's right there on the screen, guys. It's right there. It's right at the end of February. Look, gold peaked right as this conflict in Iran started. And look what happened to gold right after. Well, if you guys were reading, you were watching the channel, you saw it. I'm going to go right back here to show you. Drop it in the comments, guys, because if you know, don't hold back. Don't pretend like you don't know what happened here. Look at this. Look at this. Gold peaked. The volatility in gold right here, 129 this year, January. We had a month of volatility in gold. Look what happened at the end of February, guys, as gold recovered. Look at that. It is to the day. Look at this. 2/27/2026. What did gold do? It peaked. What did retail do? They rushed back into gold. They thought gold was going much higher. They thought we were going to $6,000 per ounce. They thought gold was going to go higher. And what did retail, what was this signal right here of the volatility? This was the signal to big money, because gold is such a liquid market. This was the signal to market makers, hedge funds, and foreign investors to start looking at, because they peaked here. They made all their money from November, October of last year. They actually made it much back all into August. But what happened is that gold peaked again, right? We headed back up into they were really following this volatility for a month. Smart money exited gold. And what did they do, guys? They went right into crude oil. Look, to the day. Look at this. It's right on the screen, guys. Look, 227. Right when the conflict started, these same market makers that made over 100%, multi-thousand percent on option trades with the gold miners and the spot price of gold. And I mean, hell, you could be into crypto. You could be on PaxG and you could be riding this. I was even riding it a little bit out of just speculation. And what did we see, guys, for that month? We saw these market makers go directly into crude oil. We saw them, look at this. They literally rolled their funds. They rolled their money and portfolio allocation into crude, right? If they have big positions, they're opening up futures positions in crude, right? Or if they're retail traders, they're just going over to the ETFs. They're literally opening up option trades and option spreads. And depending on where you're at in the world and what access you have, potentially swaps and binary options against these same spreads. And they're making multi-thousand% gains as everybody is buying gold, guys. I mean, that is the most ironic thing is that when gold goes down, look what happened. The capital rolled into crude. So guys, I mean, if you're catching this channel for the first time, this is where the money in real time is going. If you follow the money, it's very obvious what is happening. And now what we're trying to see is now that the volatility this month, right? Look, gold peak. Look at the oil futures price, guys. I mean, really, look at this. Look at the May oil futures and look at the spike here, all the way up to $120 a barrel. I mean, this is absolutely insane. And now what we've started seeing is we've seen this volatility catch in for the last almost month, right? Because this is right as the conflict started. We saw massive run up. We saw those futures, we saw those option spreads in all those various different things I just mentioned. We saw a capitulation candlestick, or did we? We are seeing that same kind of consolidation with volatility, right? Obviously, we're looking at futures. If we opened up the spot price of crude oil, it would paint a little bit different picture. But you guys see where we're going with this. Where is the money going next? Are we going to $200 a barrel for gold? Or is foreign investment going into safer assets? Is the yield on the 10-year treasury going to be the next play? Are we going to see interest rates? Are we going to see the yield on the 10-year treasury note become the next vector for market makers and for hedge funds to pile in and roll over capital? And that's kind of the question of the day, guys. That's the question as we're sitting here with markets closed. What is going to be the portfolio allocation swap? What is going to be the rollover into the next move? And that's what a lot of people here on the channel are looking for. We don't know. We don't know exactly what's happening. We do know that the dollar has been strengthening, which is obviously putting more strain on margin calls on the S&P. We've seen people exit their gold positions, and now we're sitting here wondering where that capital is going to flow to, or it's going to go to probably a couple different things. It's going to increase the dollar. We're going to see the DXY continue to climb. So if you guys are foreign investors watching the channel, I know it's not a lot of people, but we're going to see people go into a safe haven for the US dollar. And then also what we're going to see is we're going to see a potential rollover into the 10-year treasury, and the yield on that 10-year treasury is going to further suppress what is going to be maybe the next 6 months to a year opportunity for people that are going to diverse out of the stock market. They're going to be coming out of the futures market. They're going to be coming out of the commodities market, and they're going to be going into potentially, I'm going to go ahead and throw it out there on a wild card, a potential real estate correction that is going to drive home prices much further down because, with that 10-year treasury note, guys, going up, it is going to push. And as anybody drop into the comments, have you guys been looking at the 30-year fixed mortgage rate as this escalation in Iran has currently been taking place? And if you noticed, there has been, for a median home price of $400K, there's been a jump in $37,000 worth of interest just in the last 30 days. Okay, that's the price of like a brand new car or something, right? So we're looking at this as a macro standpoint. We're looking at where are market makers, are hedge funds gonna, are they gonna diversify out and maybe go take some of that portfolio allocation into hard assets? Or are they going to potentially go into riskier assets, potentially like, I mean, guys, I mean, I'm just going to throw it out here at the end of the live stream here. They could go into cryptocurrency, guys, and that could be kind of where we take this chat next, is that there is a potential that with a lot of the stuff happening, and I'm going to pull up a couple different things here for you that's going to kind of illustrate this, is that there could be portfolio allocation that actually has a higher appetite for risk. And where is this higher appetite for risk to maybe, have a blow off top or a capitulation candle similar to what we've had in gold, similar to what we've had in the S&P, similar to what we have had now in the crude oil markets, commodities, ETFs, options, binary swaps, all these other exotic futures markets. What could be the next move could maybe blow your mind, because what we're looking at here on the channel is, yeah, that yield on that 10-year treasury note is going to suppress the housing market by definition, guys, because it's going to allow the buyer pools that are in the markets shopping for homes. They are going to have a tough time because 90% of these people, guys, they're buying with finance. There is no cash buyers right now. I mean, there's a few, but not too many. And that's me just letting you guys know, because I have a boots on the ground experience with talking with people and seeing that I can cross-reference people that are going to sell their homes. I can literally plug in their address using some of my licensed real estate tools here, and I can literally see that these people are in financial trouble already. They have HELOCs on their homes. They have refinances, yet they're going to sell with a 3% interest rate. So a lot of these things aren't making sense from having a boots on the ground experience with this real estate stuff. So we're applying it to the macro. We're trying to figure out, is the drive of the 10-year treasury note going to be a long burn into the housing market that's going to potentially cripple the demand, potentially making oil soar even higher? And then is that going to roll over into potentially a blowout top into the summer or into the end of the summer with cryptocurrency prices? And we're going to dive into that right now. We're going to show you that actually could be a possibility here, guys. So we're going to take a quick little 10-second break here. We're going to jump into the chat and see what people are, what are people thinking about this? Is this something that's, is this something that is reality, or is this potentially something that is just, is this something that is a little bit just, is it too far out there for people to really understand? Is this stuff too far-fetched for people to grasp? We don't know. We don't know what people are doing. We understand that this could be a possibility, and obviously there's a lot of things that could maybe go against the trade, but I mean, we're going against history here, guys. We're actually looking at history kind of change, because by historical means, and I brought this up in yesterday's video, for a blowout top in the crypto markets, this would be against what history has said, simply because usually 18 months after the halving event, we start going down in the crypto markets, guys. I mean, that's kind of the thing here, is that 18 months after the halving typically is when crypto starts imploding, and we start getting these 20-30% drops after we've already retracted 50%. And that could be a possibility, but we could also look at this stuff a little bit different now and say, what, I did a video yesterday about Peter Brent. He was saying, oh, there's a 75% drop coming in the crypto markets based on historical events if things play out like they did in 2022, which isn't considerably accurate, because if you look at 2022, we were at a completely different playing ground in the crypto markets. We saw Terra Luna, a multi-billion-dollar crypto unfold in real time, simultaneously with a multi-level Ponzi scheme of FTX implosion, where we saw capital and all these bad loans in the crypto markets basically cause, banks like Silvergate Bank and, all these crypto banks that were catering to the crypto community. We saw all that unravel. So it's a completely different playing ground. Really, the crypto market, if you actually look at it right now, it's been pretty stable over the last month. I mean, when you start looking at things from a crypto macro standpoint, because we got to understand, guys, the crypto markets, the entire crypto market, once you take out Bitcoin and Ethereum, it's really nothing. It's literally like the liquidity is basically nothing. And you might be like, dude, what do you mean? The crypto market's nothing? Well, it's like, it's kind of true, right? Because if you look at the crypto market in comparative to like what all we've like the bond market, the gold market, the precious metals market, the S&P, it's like a small sliver. And drop it in the comments if anybody knows the percentage. But I would probably put it like a very small percentage point. If you take away Bitcoin and Ethereum, it's probably like under 1% if you compare that to what we just talked about. So that could scare a lot of people away. Obviously, it would scare a lot of people away because if they have a multi-million-dollar portfolio, why would they go into something that they couldn't even get out of? Well, I'm about to tell you guys right now that the crypto market at 2.3 trillion is actually a pretty steady, healthy crypto market. Okay, and that's somebody who looks at the crypto market every day for the last 7 years. That is actually a very healthy number and a number that we've been at for quite a while, like a very long while. And like, let's pull it up just to give you kind of a rundown. This 2.3 level trillion is way down, right? It's way down from almost the 4 trillion we were at. However, look at it, guys. There's a support level here going back all the way to 2023. And now what I'm going to do is I'm going to open up kind of the Pandora's box here, is that a lot of the coins that we've been talking about here on the channel for a number of years are actually starting to appreciate against BTC. All right, what does that mean for people that are watching the channel? That means that people that made money, retail traders, people that have made money in the crypto markets are now rotating capital into higher risk altcoins. And there's a famous gauge that I don't know what it's called. I forget the name of it off the top of my head, but basically it's showing that people are, let's just show you, let's just show you guys here on the channel. Let's pull up a couple coins here that are top 15, top 25 coins that have been around almost a decade. And let's show you rather than tell you that what's been happening in the last 30 days is actually fact and not fiction. It's actually fiction. It's fact. It's actual fact, guys. And this stuff is going to play out probably over the next 30 days. I would expect us to see a run up in the crypto altcoin market simply because we've seen Bitcoin run steady and we've seen appreciation against Bitcoin in terms of altcoins. I'm going to show you that right now. We're going to jump right into it. That way you guys have a clear expectation of where the markets are going. And we can maybe position ourselves into the next year with real estate prices continuing to crash. And we can also position ourselves in maybe a blowout top into the end of the summer or towards the end of next year with maybe an all-time high in Bitcoin. But obviously, explosive side narratives in the altcoin market that we're actually seeing play out in real time. Now, I'm not World Coin Index, guys, so just to let you guys know where I'm at here, worldcoinindex.com. Is going to be where you're going to be going to find these allocations of capital that are spread along the Bitcoin market. Now, it's very important to note, the most important part here is that we're not looking at these coins that we're about to dive into against the US dollar. Why are we not looking at these coins against the US dollar? All right, the US dollar is going up in value, meaning these coins are either going up with the US dollar, or they're outpacing the gains on the US dollar, or we're looking at this against BTC, right? This narrative of a store of value, a hedge of it against inflation, something that runs in parallel with the S&P, because historically that has happened. We're also looking at a past narrative that is an 18-month out crash, right? A capitulation point of the crypto markets, typically 18 months after the halving. We see cryptos have a blowout top. The crypto markets retreat. We obviously get a retractment anywhere from 50 to 75%, with altcoins leading the way in that downward shift. Now, what I'm going to bring you up here on the graph here is, guys, a little bit something different. Probably one of the only people on the internet talking about this stuff. So just bear with me here as we give you your secret weapon over the next couple weeks. Let's look at what's happening right here. All right, now what I have pulled up for you is Zcash. Now, Zcash is a privacy coin. We're not going to go far into the fundamentals of what it actually is. You guys can do that on your own time. But what we're seeing here is a consolidation, all right? We're seeing a consolidation on the weekly graph, on the monthly graph, and we're seeing a bottom being carved out on the 3-month. Let's look at the 6-month here. So we are starting to see these altcoins start to pick up. And again, if you guys are just tuning in, we are not looking at Zcash against the dollar. We're not looking at Zcash against the dollar. I think it's up a couple 100% against the dollar. What we're looking at is Zcash against BTC Bitcoin, a coin that a Bitcoin is the highest, most liquid, biggest market cap. The entire crypto market cap revolves around it per se. You know, a lot of people will say, but it's not the pockets of liquidity that I think are going to take people. I don't think people invested in Bitcoin are going to be getting multi-1,000% gains, okay? Or even multi-100% gains. I'm just going to throw that out there. For people that are invested in Bitcoin, they're going to get gains. Those gains are definitely coming, and you're going to have a very highly liquid system that you can enter and exit with high liquidity. But I don't think you're going to get multi-100% gains in a short amount of time. I'm just going to throw it out there. I mean, I'm just being honest with you guys. If you guys are looking for a multi-100% gain, you're not going to get it in Bitcoin. I don't see it. I don't see Bitcoin going to $1 million in the next 6 months. I'm sorry. I mean, I hate to break it to people that are invested in Bitcoin. You know, is it a long-term store of value? Yeah, it's doing pretty good. Is it outpacing the S&P? Yeah, you could arguably say that. Is it run parallel with the S&P? Yeah. But if things start running sideways in the Bitcoin markets, where is money going to flow into these liquidity pockets that is going to position people for higher percentage gains? And that's kind of like what we're telling you, where we have to look at history, because at the history of last year, on that 18-month out event of the halving event, we saw a blow off top in Zcash. We saw Zcash literally go up over 1,000%. We saw Grayscale pile into more portfolio allocation into Zcash. We saw literally, you know, an entire privacy movement into Zcash. We saw Monero shoot up. We saw Horizon Zen token shoot up. We saw Xano hit all-time highs. We saw pretty much every privacy coin going back to Z Classic, which is a no-name coin that nobody really even trades. We saw all these privacy coins pick up steam. Now, where are we at right this second in this moment? Well, a couple different things. I want to pull up another chart for you here. I want to pull up Dash cryptocurrency, a 10-year-old plus cryptocurrency that I don't think anybody in the world is paying attention to. All right, it's been around for fucking over a decade, guys. It's been around 12 years here. All right, so again, you know, we got this thing pulled up against BTC, and holy shit, man, if you bought up here and you're down here, what a fucking loss or a missed opportunity. But that's not where people are at here today, guys. That's not where I'm at. I can tell you, I'm somewhere around like here. I'm not going to lie. I'm not going to sit here and like blow smoke up your ass here, guys. I traded way too much Bitcoin Cash for Dash over a period of 3 years. And yeah, do I regret that? Kind of, not really. Not after the action that we saw last year into this privacy narrative explode. And what we're seeing here, guys, is I just want you guys to listen to me for a second. All right, we're gonna take off the chart here. Let's take off the chart here. Let's not get too excited. What I'm going to tell you here, guys, is that we are going to see a pivot back into privacy. Have you guys seen Midnight Token? It's up today too, by the way. Has anybody been following Charles Hoskinson? They launched Midnight last week officially. And now they're doing these ambassador programs that's even launching it. Obviously, it's been around for a few weeks. You guys might have heard about it. It's up over a couple percentage points today, and it looks like it's carving out a bottom. All right. Dash cryptocurrency is going to be implementing shielded Zcash privacy pools on their Evolution sidechain. All right. We also have other cryptocurrencies that we talk about. They're all here on the top here. I don't know, guys. They've been the same for a fucking number of years. I don't think people have been listening enough, but it's all good because we know that this stuff is actually playing out. Bitcoin Cash, guys, is getting an upgrade here very soon. That's going to allow on-chain smart contract compatibility with multi computer language technology that is going to be driving this coin up. All right. We've seen a Monero coin that has been kind of running inversely to these Bitcoin slumps, right? We've seen Monero every time Bitcoin goes down. We've seen this kind of like a couple percentage point into Monero increase, right? Dash cryptocurrency too, guys, I think is a hidden gem that nobody's talking about. And I think this is a coin that can literally do we're going to throw it out there, like a 5,000% gain, right? We're talking about maybe like a 10,000% gain. And why is it going to do these gains, guys? It's because it's very, very fast to move around money. And these crypto exchanges, guys, they're auditing all this stuff. They're looking literally at all these orders coming in. They're looking at every little analytical data point, and they're communicating with one another. These crypto exchanges, Wall Street likes to think they control everything. They don't control the small maturing very rapidly, the rapid technology improvements of the actual crypto markets. They think they do. They think because they can implement spot ETFs and they can implement, all these legislatures between the CFTC and the SEC regulating commodities, and they think that they can, it's like the old SEC chairman. What was his name? The little bald guy. He was talking about, XRP as a security. We saw that they really didn't have any control over the actual trading of these type systems, right? And crypto is a computer system, guys. It's computer software, just for FYI. It's not it's not what these people think. It's not what Michael Saylor is telling you guys, okay? These ideals that these people are trying to propagate in the crypto community are so far from what actual crypto people, like the actual crypto people like me that have been in this stuff for quite a while, much longer than Michael Saylor, much longer than half these people you hear on YouTube. This is not what crypto people fucking signed up for. What crypto people signed up for is something that is disattached from the modern day market. It's kind of funny too, because while this whole ideals from crypto people is actually propagating on the back end of stuff, that's why we saw Zcash and all these communities that really were kind of dormant for quite a while explode into the end of last year. What do we have now here with the crypto market? Now we have like Wall Street trading oil on the blockchain, right? We see like this whole, like, we have this poly market that is doing an entire betting systems, our entire sports betting, weather futures. We have all these weird things happening on the blockchain now. And like, we simultaneously are not seeing these native tokens even rise in value. So isn't that pretty interesting to think? You would think with all this traffic, with all this trading of oil and all this sports betting on poly market, you would think these various native coins would actually go up. In fact, they're actually not going up because that type of technology is just something that hosts all these other type trading mechanisms. It's not something that actually drives the actual token price. What do we know, guys, here on the channel? If you guys are just tuning in, what do we know that drives prices? Token supply, order books, the position of order books, and the most important, liquidity. That is why token prices move. I want you guys to tell me up here in the top section if you guys know anything about crypto. How many coins does Ethereum Classic have ever? It's 210 million. How much does Ethereum have? Well, it doesn't have a cap supply, meaning, there can be inflation in that coin. That's why I think you've seen a detachment of narratives, even by founders like Vitalik Buterin. How much coins does BSV have? Nobody's talking about it. 21 million. How many coins does BCH have? 21 million. All right. How many does Monero have? I think it's like, I can't remember off the top of my head, but you guys get my point here, right? Zcash, 21 million. How many coins out there have a cap supply? It's a small fraction of the crypto market, just to let you know, if you guys just want me to give you the answer. It's a small fraction of the crypto market. It's not like this. It's not like all the coins, all the bonk tokens, all the fucking, I don't know about bonk, but you guys get my drift. All these meme tokens. The crypto is a very vague, broad ecosystem, right? It's not like you can say Bitcoin Cash or Monero is the same as like all these meme tokens, right? It's completely contradictory. Most of these coins, and somebody at my work told me the other day, hey, you might want to check out Solana. No, I don't want to fucking check out Solana. Why do I not want to check out Solana? Well, because Solana, if you guys noticed, we were talking about it at $9. And when it went to almost $200, why everybody was caught up in the meme token craze, what happened? Everybody lost money. You know why everybody lost money? Is because those meme tokens, you couldn't exit the trade. There was no liquidity. The only people going in, betraying the graph going up, was the exit liquidity that was making those same people coming into the trade not able to get out. What does that mean here for people that are just tuning in? That means that we're positioned in our own portfolio allocations for rotating capital to come into the crypto markets to disrupt the automated liquidity that is currently in place. Now, what are you saying here? What are you saying here, Chadwick? You're saying that the liquidity in place is all automated? It's all wash orders? It's all fucking spoof orders? Yes, that is exactly what I'm saying. And once liquidity starts getting introduced to this system, we're going to start to see vertical jumps in a variety of the coins that we're talking about here on the channel. I'm going to throw it out there. I think this will be by summer. I'm not going to sit here. Maybe I'm wrong. Maybe it's by the end of the year. Hell, maybe it's next year. I think we're going to see a massive run up into various amounts of altcoins. Why? Because like I told you, that's what we've already been seeing, guys. That's what we've already been seeing. I'm going to pull up Bitcoin Cash because I think it's a clear indication of kind of where the market has been going over the last year. If you bought Bitcoin Cash, if you traded all your Bitcoin into, right? Look down here, 0.0035. If you traded all your Bitcoin for Bitcoin Cash today, say I had 100 Bitcoin last year. I now have 200 Bitcoin if I sell today. Okay, let's look at Monero. I'm going to show you guys every single one so you guys know what the fuck we're talking about. Because a lot of people are just saying, oh yeah, this about crypto. You go over all these crypto channels. None of them are fucking showing you this. And the reason they're not showing you this is because they don't look at it. They're so fixated on telling you, putting Bitcoin in the fucking title of their video so you click on it, or Ethereum in the title of your video so you click on it. They are not showing you guys the 100% gains that are coming. Look at Monero. I got it right here on the graph. You are literally up over 35%. Look, if you sold up here, hell, look at this. Bottom, 0.25. Guys, you're up 200%. You bought 100, you had 100 Bitcoins last year. You sold when Monero was up here in January, and then rolled your money over into precious metals. Congratulations, you're up 500%. All right, or 400%. All right. So my point is and not only are you up that percentage points, right? If you're a retail trader and you're going, holy shit, man, this is exactly what I did. We know traders are watching the channel. So where are we at now where we're at higher prices for these portfolio allocations of various altcoins? Monero is still up against Bitcoin, right? Let's look at Dash. I'm showing you guys this so I can show you the proofs in the pudding, right? Well, hell, you got to pull up the graph, guy, or you're not going to be able to see it. Let's go back to Monero and show you. Let's go back to Bitcoin Cash. Look at this. That's the yearly chart of Bitcoin Cash against Bitcoin. It's up over 100%, guys. You're double your Bitcoin. So people that have been riding, if their goal is to acquire more Bitcoin and they have the contradictory argument that Bitcoin is the only store of value, wrong. No, Bitcoin's not the only store of value. That's why Bitcoin Cash is up over 100%. And by historical terms, even though we're not following this 18-month capitulation candlestick cycle where everything crashes in the crypto markets, this is indication to me that crypto markets, especially the altcoin market, could see vertical jumps very soon when we see the rotating out of the stock market, the rotating out of the precious metals market, the rotating into safe haven assets like the US dollar or treasury, 10-year treasuries or whatever. We could start seeing some of that portfolio allocation go into some of these high risk markets where speculators and hedge funds are putting more higher risk out on the table into these smaller markets because they're understanding that these markets are actually very small and a couple $1 billion moves them a couple 100%. That's what people are starting to look at. That's why even the crypto people, by historical context, have rotated capital outside of Bitcoin into some of these riskier altcoin assets, right? And that's kind of exactly what we're seeing here because somebody is moving this, guys. It's not somebody, it's many people. It's the Bitcoin whales that are rotating capital out of Bitcoin into this higher risk asset class, the altcoin market, which is a small fraction of a sliver, guys. I mean, we're talking like if you take Bitcoin away, if you take Ethereum away, you are going to get a fucking market that is so tiny, that is so forgotten that you don't even see if you're a macroeconomist or a macro strategist like myself. You understand the numbers that are behind this and that a couple $1 billion entering this non-liquid system shoots these coins up vertically couple 100%. You're going to be looking at Bitcoin Cash. It's going to be up $4,000 and all of a sudden people are going to be saying, oh, Bitcoin Cash is a store of value. You're going to be seeing Litecoin. Oh, Litecoin's the digital silver. You're going to hear all these narratives while people like us here on the channel are up multi-100,000% gains, guys. And let me show you again. I got the chart right up here for you so you can look at it yourself. Don't take my word for it, guys. The chart's right here. Let's pull it up. Monero. It was up 200%, like I just said. People that rolled this into the gold speculation bubble, wow, you guys are up a lot more than that. Let's go ahead and look at Dash. So what I'm showing you guys is that there is a math to this. There is a, you know, if you follow the money and you start following the money, you will start to see that some of this stuff does actually make sense. Even coins like Dash, little sleeper coins, look at the volatility. We all know as traders, we all know as people that are involved in these type investments, once the volatility starts picking up, this is where we run, guys. This is where we start actually moving. This is where we start getting those vertical leaps up that outpace previous vertical leaps. I mean, guys, Dash last year hit $120, up from 20. It was up 600%. Who the fuck on the internet was talking about this? Who is on the internet talking about this? You're welcome. All right. It was me. It was me and maybe like, I don't know, one or two other people. Let's look at a couple other things. Where's the opportunity at, man? You keep talking about stuff that's already happened. Well, let's pull up Ethereum Classic, one of my best performing altcoins of 2021. It went up over 1,600%. Let's pull it up for you to maybe show you some opportunities we in the live stream and, you know, some sleeper coins that might be, you know, exploding vertically. Like, right? You know, we go up 100% on Bitcoin here soon. Well, hell, we're only where we were at last year, guys. Okay, we're only where we were at last year. We'll finish it up with BSV. That way we don't scare anybody out of the chat, because a lot of people, you know, when you start talking about certain stuff, they go in their certain direction. But I just say, ask Satoshi. Ask fucking Satoshi when he's selling his, and we'll stop talking about it. Yeah? All right, so look, you guys are wanting opportunity. It's right there on the screen. All right, we'll talk to you soon, guys. Appreciate you coming in. If you want to donate to the channel, we're not on Twitter. We don't, you know, we don't grift too much. But if you want to, we appreciate it. We'll talk to you soon. Take care.
What is up? What is good? I hope you're enjoying the live stream. I wanted to take a moment to let you guys know, as you're enjoying the live stream, that there is several ways that you can help the channel and help the community that we're trying to build here on cryptocurrency theory reach a broader audience. And obviously the obvious ones are like and subscribe, but past that, what you can do is you can share the videos on Twitter X, a platform that I've been banned from for several years due to what I think is some BS. But also here on the screen, guys, I have a couple different coins that I personally love, and I hope that you love too. And if you would like to donate any cryptocurrency, guys, just know that as a cryptocurrency enthusiast, this is the best thing that you can do to support the channel. You know, watching the videos, liking the videos, sharing the videos, that's great too. But at the end of the day, there's nothing more exciting for me is when I get a crypto payment. And if you do give a crypto payment, throw it in the chat to let me know that you sent the payment so I can give you a personal shout out, because it means a lot and it's a lot of fun, which is the whole reason I got into cryptocurrency in the beginning, was it's a whole lot of fun getting those crypto coins and then holding them and stacking them and that kind of thing. Because every crypto I get, guys, I think of it like a wall. Every brick that I lay on that wall, I intend for them to stay there. So if you see your favorite cryptocurrency on the screen, or if maybe there's one that's not on the screen, let me know, because I'd like to add it to the screen. And let's get back to the live. Let's go.